XR people, I need you to ignore the price for a second because the bigger signal is sitting right beside it. We're looking at 147 XRP, but that's not the story. The story is how small this entire market still is and how badly the headlines are missing what XRP is doing inside it. Bitcoin gets the spotlight, Ethereum gets the mention, maybe Hyperliquid gets pushed as the shiny new narrative. Meanwhile, XRP is quietly putting up the number nobody can pretend isn't there. And once you see that contrast, the rest of today's setup starts making a lot more sense. First, zoom out. The entire market is $2.63 trillion. Big number, sure, but I think we got to almost $4 trillion in November 2024. Maybe I'm remembering that run wrong, but the takeaway is the same. This market still has a lot of room. We're early in the larger move. Now compare performance with the headlines. Over the last 7 days, Bitcoin has gained 22.28%. XRP has gained 47.76%, yet the coverage will probably center on Bitcoin, Ethereum, or maybe Hyperliquid if that's the new narrative. Same pattern every cycle. XRP becomes the elephant in the room, and I love watching it happen. 2 weeks ago, XRP had its lowest weekly close in 21 months. Last week, XRP pumped 70% and hit a 7-month high. 7 days of gain erased 7 months of pain. That's why I accumulate during the ugly stretches. When the dips hit and there's blood in the streets, that's when I keep building. It's worked for me every time. If you know what you hold, a bad week doesn't suddenly erase the thesis. Now listen to Standard Chartered on Bitcoin because it sets up the broader market picture.
But you say by 2030 it could be 500,000 US? What would it take to get there?
Absolutely. So I think we've now seen the end of this drawdown cycle. So in Bitcoin, you tend to have these 4-year cycles. The all-time high was last October, 126,000. Most 4-year cycle theorists say we'll go down for 12 months or so, and then we'll start recovering. I think we've started to see the recovery a little bit early this time. And in the medium term, I like to compare Bitcoin to gold. And you think about that in a 2-asset portfolio. And considering what gold's done in the last couple of years, the market is now under that guise, structurally underweight Bitcoin. Yeah, so if you think again about that 2-asset portfolio, medium term, you'll get more institutional investors buying Bitcoin. Volatility of Bitcoin keeps coming lower. And so again, investors end up structurally structurally not long enough Bitcoin once again. And that's the type of flow that can easily see us, again, in a very small asset class, push up to 500,000 for me by the end of 2030. So for me, we've seen the low this cycle. We're going to head up to 500K in just over.
Keep that in mind because Canary Capital's co-founder just put a 12-month XRP range on the table. Canary Capital co-founder just dropped a price target on XRP. It wouldn't shock me 12 months from now to see XRP above $3, $4. Hear the reasoning directly.
To see, let's just talk in terms of price, right? It wouldn't shock me that, XRP's above $3, $4, 12 months from now.
But as far as the lending market.
So the range he gave for XRP looking 12 months out was $3 to $4, and he wasn't done.
Is massive. I've said for a few years now that the winner for financial rails for a protocol is going to be XRP. And, some of the complaints about XRP is lack of decentralization. But when you're looking at financial rails that institutions use, they want centralization. They need centralization. Yeah. And there's a lot of great protocols out there that are more decentralized that are going to be probably used a little bit more by retail that retail investors prefer the decentralization, but institutional investors are going to prefer more centralized platforms. And with the XRP ledger having the ability to produce a yield, it's going to attract a lot more capital.
Yeah, well, and maybe
that's where my head goes too. I'm ready for the yield. I've always believed the winning model is what I call controlled decentralization. The technology gets used, but banks and regulated institutions don't just disappear. Pure decentralization replacing the whole financial system was always fantasy land to me. Adult land finance is going to blend the new rails with existing institutions. Over in Germany, there's a financial analyst who's been consistently bullish on XRP. I can't remember the city, but it's not Frankfurt. His call is simple, $5. Skipper XRPL then connected that $5 call with another XRPL story counting down to August 24th. German TV analyst just dropped a bullish XRP call, minus $5 is now on the table. And now Real Token is approaching a big moment. Real briefly is preparing to reveal its biggest announcement yet, with the ecosystem set to expand globally across the $38.5 trillion payments and media sectors through Real on XRPL. What's behind the August 24th countdown? The next chapter of Real is about to unfold. The bank XRP posted a move that longtime XRP holders will recognize instantly. XRP just did XRP things, from glued to $1 for 3 straight days to almost touching $1.69 in a single explosive move. Look at that liquidation heat map. Longs got REKT on the wick up. Shorts got REKT on the way there too. Now cooling off around $1.45 to $1.50. Is this the launch pad for leg 2? So is this a cool down or the launch pad for leg 2? Previous bull runs have done exactly this. XRP rips, goes quiet for 2 or 3 days. Everybody starts doubting it, and then boom, another leg. That's the setup I'm hoping we're watching. And if the next move pushes past the all-time high, the chart conversation changes fast. Blockchain Backer, one of the chart guys, put the bullish case this way. Confirmed, the argument of the bottom already being in is outrageously in favor of the bulls. Now Raoul Paul takes us from charts to banks.
Of the bull market returning, continuing the secular trend that it's been in since it came out, for me is extremely high, because every single bank and every single financial institution and every single government is telling you it's going to. They wouldn't be regulating if it's not going to happen. The entire banking system is telling you it's going to happen. Everybody from Larry Fink to Jamie Dimon is telling you it's going to happen. And yet people are saying, well, it's not going to happen. So that's highly unlikely. So it's the liquidity story more than anything that brings in excess capital and excess savings, which allows us to speculate more, which is why they always go hand in hand. And I think we haven't got to that point in markets because liquidity has not been growing enough. And my bet is it's coming.
My bet is that's coming too, and Washington is showing the same convergence. Brad Garlinghouse was at the CFTC, and look who was in the room. No August doldrums in DC this week. It was great to join the inaugural at CFTC Innovation Advisory Committee, a group I've called the Olympic roster of crypto. But for a crypto gathering, there were a lot of TradFi players in the room, like at NASDAQ, at CME Group, at CBOE, at Options Clearing, at NYSE, at the _DTCC Alphabet Soup. Everyone was in agreement. Rules written for a different era aren't good enough. Not for consumers, not for business, not for innovation. I made this case in an open letter to Congress back in 2019. 7 years later, we still need clear rules. Thanks to the Trump administration, appointees like Chairman Selig, and a myriad of bold leaders in Congress, we've never been closer. Crypto and TradFi are now sitting at the same table saying, the old rules don't fit. Then David Goldstein dropped a line that feels almost designed for the XRP community. I really think the most delusional communities are going to win in this next bull cycle. That took me straight back to the artwork Brad Garlinghouse had on his wall. The one basically saying, people can laugh today, but XRP could eventually power the world. I've got one in my office too. Funny how ideas people mock can look a lot less crazy once the infrastructure starts catching up. Now here, Chairman Michael Selig from the CFTC.
If Clarity stalls or fails to pass, the CFTC has signaled that it's prepared to unilaterally dial up oversight. What would that look like? What sort of rulemaking are you prepared to take in that scenario?
The CFTC has a lot of authority, and we're not afraid to use that authority. The president has promised market structure for the crypto industry, and that's what we're going to do, whether we have a bill or not. But we're optimistic the bill is going to set the standard. We really want the United States to lead, and having legislation, clear law on the books is the most surefire way to lock in crypto market structure. And so that's what we're focused on today.
Next is the general counsel at Superstate, formerly Coinbase. Listen to what he's saying about regulation.
So it's really a barbell both on the entryway and the exit way of how securities laws apply and how they don't apply, and really takes an interest in, what makes crypto different, right? And so some of that is network effects and the underlying asset itself not actually being a security like a stock or a bond. So a really positive step forward in clearing the deck.
This is why I think the CFTC and SEC are putting real pressure on senators. The market is moving anyway. So Congress has a choice: help shape the solution or become the obstacle while everything moves forward without them.
Parts to it, different parts that have been added over time over the past year plus that we've been negotiating this. So it's not surprising that it's run into some challenges and that it's taken a little bit longer than expected, but different senators on the right, on the left have all engaged with it, and we've really gotten down to a place where there's just a handful of issues left, and it's not really a, kind of an open-ended issue. It's really down to like, it's either this or that. So we're kind of at a binary stage, and that's usually when some kind of grand bargain can happen between senators on both sides of the aisle. So I'm still very optimistic we're going to be able to get it done. Conventional wisdom would say it's challenging to get any legislation done right before midterm. Which is what we're doing here, especially something this politically fraught or intense. But I believe that we have dedicated so much time to it, not just we from the White House and the administration, staffers on the Republican side, staffers on the Democrat side. Everyone has invested so much. The industry has invested so much time, money, you name it, that I feel like people are kind of viewing this as like, okay, we put too much into this to walk away without a result, and I'm optimistic that we're going to be able to get it done.
Now listen to Senator McCormick.
Well, I agree with the president. We need to vote and get this passed in the Senate, and I think it's important to step back and say why we should do this. This innovation, this opportunity, we want to make sure it happens in America. There's thousands of jobs in Pennsylvania and hundreds of thousands across the country that are driven by crypto and the innovation that's taking place. But this is also a framework that's going to protect consumers, ensure that we have the appropriate anti-fraud and terrorist financing protections. So this legislation is something we need to get done. It was voted out of the Banking Committee with bipartisan support, and now it's time to bring it to the floor and vote. And I think we'll get that vote very soon after we come back in September. And I'm encouraging my Democratic colleagues to vote for it. I think there's some open issues that we're working hard to resolve, and I'm optimistic we'll get this done.
That's why senators who keep blocking this could end up paying for it politically. Anthony Scaramucci adds another angle.
It's been 9 weeks where Bitcoin is in the tightest volatility band that it's been in the last 5 years, so it really hasn't moved much at all. I mean, when the war started in February, it was roughly the same price that it is today. So it's been grinding, but I think there's 3 things going on. One is a lot of the miners have transferred compute power over to AI, which disrupted the hash rate. I don't want to be overly technical with people, but I think that muted some of the volatility. The second thing is capital fled the cryptocurrency markets. In addition to Bitcoin, other tokens in the cryptocurrency markets into AI. And then I think the third thing is if you're a 4-year cycle believer, like most people are in crypto, Bitcoin now is getting towards that end of what we would typically see the bear market of Bitcoin in the 4-year cycle. So we're now through 2 years, and we're about 18 or 19 months away from the next halving. So all of those factors, I think, have muted Bitcoin's price. But I guess the real question is, are we still bulls on Bitcoin? And the answer is resoundingly yes. I think as the halving cycle comes in again and we cut the supply of coins again, it will tighten price, and I think you'll see the thing move back up over 100,000.
If banking licenses become, part of the next phase, who's near the front of the line? Ripple, and then you've got CZ and Binance in the wider conversation. Here's the bigger point. Crypto finance and traditional finance aren't staying in separate boxes. The lines are already blurring. Even if the Clarity Act doesn't pass right away, the CFTC and SEC are pushing the systems so close together that Congress has less room to pretend they're separate. That's why I see the Clarity Act as a win, not an if.
So crypto is not its own industry, just as like internet should not be its own industry. Sure. It's a technology. Crypto should be just a technology that enhances financial tools, financial applications. So there shouldn't be a TradFi versus crypto kind of division. existing financial players, institutions should use blockchain technologies and should adopt all the things that's happening in crypto. All the crypto guys should be providing all the services that traditional financial guys provide, including trading stocks, including loans, all these financial tools. So it's just one technology that should be applied to a service. And there's no division between crypto and TradFi, in my opinion. There shouldn't be. Right now, the industry is relatively new, so the new players can tend to be lumped into crypto players, crypto platforms. But there shouldn't be that. That's a purely labeling division. There's no reason why. Well, for example, if you look at crypto platforms like Binance, they provide loans to people. They provide savings programs. They provide a lot of payment solutions. They provide 40, 50 different financial products to retail users around the world using the blockchain technology, right? So there's no division. So I think they should.
And one political piece matters here. John Deaton. I don't see anyone running for Congress who's more pro-crypto, and the XRP army already knows what he's done for this community. If John Deaton replaces Ed Markey in the Senate, that could change the math on the Clarity Act. To me, Ed Markey is no different than a minion of Elizabeth Warren. In Massachusetts, I see him following her lead. Put John in that seat, and you've potentially added another Clarity Act vote. That's why Metal All Men's Point hits differently after the last couple of days. If, hypothetically, your net worth has surged in the last couple of days, now might be a good time to donate to Deaton for Senate to protect freedom and innovation in this country. That's it for today. Don't just watch the XRP candle. Watch the institutions, the regulators, the banks, and the votes around it. If this helped, hit like, subscribe, and tell me below, is this the cool down before leg 2, or does XRP need more time? Thanks for watching, guys. I'll see you in the next one.